Hello, everyone. I'm Matt Clark, research analyst with Money and Markets, and joining me as he does each and every week is Green Zone Fortunes co-editor Charles Sizemore. It is time for our weekly edition of Investing with Charles, and as you can see, Charles is coming to us from the lovely vistas of oceanside Peru today. Welcome, Charles. Thank you for joining. I'm going to jump right in. A lot of news involving the markets over the last several days have involved Eastern Europe. And obviously we're talking about, Russia kind of positioning chess pieces around Ukraine. It's still some uncertainty on exactly what's going to happen. We've seen the U.S. Close their embassy in Kiev, the capital of Ukraine. The Dutch, the British, and some of the Baltic states have pulled residents out, have pulled their citizens out of Ukraine. But as recently as Tuesday morning, news out of that region suggested that maybe we have a bit of a blink in that Russian President Vladimir Putin has said he is going to pull back some of the what is estimated of up to 100,000 troops from around the border of Ukraine. And this includes its border with Russia, its border with Belarus, or Belarusia rather, and with the Crimea, which is an annexed former part of the Ukraine. We get into the geopolitics of it and talk about that a little bit. But the broader question I have here is, first off, as an investor, you're seeing the market go down on headline fears of a Russian invasion, which U.S. intelligence services say it could happen anytime. Now we have this pullback. Expect the market to rise a bit because that will ease some investor fears. But as a traditional investor, as a retail investor, as a smart investor, what does this tell you? What should you be doing? Because there's a lot of people wondering, the market's down. Should I be selling off? Should I be holding? Should I be buying more? What should I be doing? What is my next step here?
Right. Well, I would start by saying that the Russia deal, for the most part, is a distraction. Ukraine is not in any way, shape, or form really integral to our supply chains. It really honestly doesn't matter. So the possibility that this actually snowballs into a World War III, as people have suggested, is ludicrous. At the end of the day, there's no public appetite for war, and there's no real interest in it. The U.S. would be going at it alone because Europe's made it very clear they're not getting involved. So it really is much ado about nothing. Even if the invasion happens, if it ends up happening, it really is sort of much ado about nothing. Now, does that mean everything is rosy? You should just buy with both fists and it's off to the races? Well, not necessarily. The issues facing the market right now are basically threefold. It's the Fed, it's inflation, and of course those two actually go together, and earnings. And of course, actually earnings goes with it too as well. They're all related. But what's going to make or break this market is how those three factors play out. We all know the story with inflation right now. Inflation has been ripping at multi-decade highs, which is prompting the Fed, point number one, to be more aggressive in its glide path for raising rates, and its plans for potentially shrinking its balance sheet. Remember, the Fed was buying $120 billion a month in bonds, primarily treasuries or some mortgage bonds in there as well. They have shrunk that to essentially zero now, but they have not started dumping their existing inventory onto the market. They haven't really started to let things run off yet. They probably will. The timing of that is going to be a major either headwind or tailwind, depending on which way they go, for stocks. And that the speed at which how to put this, the Fed's move on that is going to also depend on what happens with inflation. If inflation does start to cool, I think it probably will by sometime this summer, you're going to see the Fed, probably back off a little. If inflation remains stubbornly high, they're just going to go full bore. So that's going to have, what happened to the market in January? Why was the market extremely volatile in January? It was fears about the Fed, how they're reacting to inflation. So that third point, earnings, that's another wild card. Earnings have been fantastic for a while now. Part of that is demand was juiced during the pandemic due to a lot of stimulus. Not just stimulus, also people's buying patterns changed. We bought more of certain things and we bought it sooner during the pandemic. So this caused the earnings of a broad swath of the market to be really high. We pulled a lot of sales from the future forward into the pulled back forward, maybe mixing my preposition here. Anyway, so spending that should have happened a few years from now ended up happening in 2020 and 2021. So we pulled that spending into the present there, which means that future spending in those areas should be less. So as the market digests that, as companies start to come out with their earnings forecast, that's also going to have a big impact on what happens in the market next. If earnings continue to be strong, even with Fed headwinds, the market might stumble forward. If we have these Fed headwinds and earnings are starting to look weak because, like I said, there's kind of post-pandemic hangover effect, then that's going to be a drag on the market. All of this is to say that don't take your eye off the ball here. This Russia thing, I'm not saying it's not important, but it's, when it comes to what's going to happen in your 401k, what's going to happen in your portfolio, these other factors are vastly more important.
Now, what do you say to, and I read this recently, and I think it was a Goldman Sachs note, or perhaps or another another analyst firm that suggested that if there is some sort of movement into Ukraine by Russia, that we could be seeing a stronger drop in the market than we saw in 2014 when Russia annexed Crimea.
Maybe. Now, if you think back to 2014, do you even remember that market pullback? I don't. I would have to go back and look at a stock chart to even remember it happened. I remember the 2020 sell-off in March, of course. I remember the fourth quarter 2018 sell-off. I remember the flash crash of 2010. I remember, of course, 2008 meltdown. All of these were significant market-moving events. Whatever happened during the last Crimea invasion, I don't remember there being a market impact. That tells you something about how insignificant it was. Now, will this time be different? Maybe, if the West somehow decides that this is the line in the sand, like we're drawing it. Do you really see that happening, though?
No, I think we're going to see a lot of diplomacy be aired out if that happens before we see any type of
bluster. You're going to see a lot of bluster, a lot of good talk, but at the end of the day, look at the motivations. The Biden administration just pulled out of Afghanistan. We've made it very clear that we stretched ourselves a little too thin with military engagements. It's, we're disengaging from various parts of the world that are not strategic. We're not gonna go all in on Ukraine. It's not strategic. It doesn't matter. I mean, under a different administration, maybe, but Biden's made it very clear he's sort of right sizing, I guess, our foreign policy. Not quite sure what terminology to use here, but he's scaling back certain aspects he considers kind of non-core, non-critical. It's hard to imagine Ukraine being critical if Afghanistan is not. So, that's the U.S. Look at the U.K. Boris Johnson he's in Scandal City right now, and that's not going away tomorrow. He has bigger fish to fry right now. He's a bit distracted. Germany has absolutely no incentive to antagonize Russia because they depend very heavily on Russian gas. And France historically has been fairly chummy with Russia. They've been, I wouldn't say allies, but France has been the friendliest with Russia of any Western power for decades, going back to the Cold War, in fact. So who's really going to be the one that stands up here? No one. And should they? I don't know, maybe, but I don't see the appetite for it.
It's interesting you bring up the Germany relationship in terms of Nord Stream 2, which is the massive gas transport pipeline that runs from Russia to a main terminal in Germany. And it is kind of one of the reasons why the Germans have been very hands-off, or at least much more hands-off than under the previous administration with Angela Merkel in terms of really intervening. the new government there has said, we're just going to kind of put the brakes on, and because there is a very heavy reliance there, and you've seen a lot of brokers. The Finnish president has stepped in, who knows Vladimir Putin very well. Emmanuel Macron, who is the president of France, has had intermediary sessions with Putin to try to stem the tide here. So regardless of what the politics are, things like that, the message here is remember what's really going to drive long-term market moves, and that is we have the Fed's action against inflation, we have inflation itself, and we have earnings that we are in the height of, and that have been, I don't want to say mixed. I don't think earnings have been mixed per se, but they have been different in scope than what we've seen over the past 5-10 years.
It's the post-pandemic hangover. It's what I said. Earnings got distorted during the pandemic because we started spending a lot more money on some things, less on others. It caused the earnings of some companies, particularly in tech, to get juiced. It caused the earnings of other companies, particularly in hospitality, leisure, whatnot, to really get just utterly pummeled. And so we're seeing right size is probably the wrong word, but we're seeing a reordering of that. Now, if I'm to say, okay, Russia's no big deal, so go all in and buy. I'm not saying that. I'm actually pretty cautious right now. I think this is a time to keep a little bit more cash on hand. I think it's a time to focus more on shorter term trading strategies. I think you should, as always, have risk management in place, such as stop losses, and you should honor those stops. This is not to say that, Russia's no big deal, so we should be cavalier. I was cautious about the market long before Russia was ever in the headlines. So I think kind of the takeaway here is you should have a plan in place, and that plan probably shouldn't change based on what happens in Russia. It should change based on whatever criteria you set. If you have price targets of when you sell, on the upside and downside, great. You need to stick with those.
And more importantly, if you don't, that is where we can help you. Where Adam O'Dell, our chief investment strategist, Charles, myself, we have our own service where we provide that type of analysis and information. It's called Green Zone Fortunes, and we'll provide a link on how you can find out more. But we give you insight into the market. We provide you a ton of analysis, a ton of insight, and we give you stocks that we set stop losses for, and that we provide you that path to help you weather these types of headline storms, if you will, where the market moves based on a headline. It doesn't necessarily mean it's indicative of what your broader path should be. We help you provide that broader path. Again, it's Green Zone Fortunes. We'll provide that link right up there. Charles, thanks so much. It's a delicate topic. But it is a topic that's at the front of everyone's mind, of course, and especially if you're in investing, you want to know what this means. I think you've explained that very well. The bottom line here is have a plan. Stick to that plan. Even the plan that you had even before all of this issue with Eastern Europe came about, your plan should still be the same. If you have a stop loss and you hit it, you sell. If you have a limit on a gain, then you sell and you take the gain. And that's how the system works. But maintain your system, hold to your philosophy, and if you need help with that, if you want help with that, if you want someone to guide you on that path, then Green Zone Fortunes is definitely the way you want to go. By the way, if you do have a question or something like that you'd like to ask myself or Charles or Adam, you can do so. You can email us at feedback@moneyandmarkets.com. We'll flash that down below, or you can comment down below here on our YouTube channel. We certainly love to see feedback, anything you have to say, anything you'd like to ask. We would love to address your question. If we do take your question, you submit one, we use it. We're going to send you some Money Markets gear. Could be anything from t-shirts to hats to sweatshirts, all sorts of great stuff. But we will get that set up for you. Also visit moneymarkets.com. That is your home for safe, sound, smart, simple, profitable investment information for your portfolio. And you can try out our Green Zone rating system, where you can plug in any number of thousands of stocks out there and get our proprietary Green Zone rating for each one of those stocks. We'll break it down by metric. We'll give you the overall score. We'll tell you if we're bullish, if we're neutral, if we think you should sell it, whatever. We'll give you that information. It's all there for free at moneymarkets.com. Create your watch list and track your stocks, track your portfolio using our Green Zone rating system at moneymarkets.com. He is Charles Sizemore. He is the co-editor of Green Zone Fortunes. I am Matt Clark, research analyst for Money Markets. Until next time, everyone, safe trading.